This is Dyer from Divergence Analysis. Today we're looking at a crude oil futures chart on a 5-minute basis. We're on our NinjaTrader platform using the divergence analysis indicators. Those are DVAN buying selling cycles, DVAN short-term trend, and DVAN signals. This is September 4th. Crude oil has been a big mover this week. Today it was choppier than it had been in previous days. Still saw some great moves on a 5-minute chart. These are good for intraday basis trading when the volatility picks up. Just want to go over the trades that we saw from about 7:30 a.m. to the close of the day in crude oil. The first trade we see at that time period is at 7:50. You see all of our criteria met for a short entry. Red price bars meaning selling pressure is dominant. The red histogram on the short-term trend means that we're entering a short-term negative trend, bearish trend. When we see a red arrow, it means the velocity indicator below is crossing, indicating that we're getting forceful to the downside. And we've crossed below the pivot line, this gray dotted line, meaning that the trend line, the light blue line, is down. This leads to a big hit to the downside. Good places to watch for exits. Once you've had a move like this and are in the profit like this, is when the leading line comes back into the histogram and when the price bars start turning back in a color against you. So in this case, when the price bars go from red to green. Next we see a good long entry at about 9:20, or at 9:20 exactly. Green price bars lead up through the pivot, meaning the trend is up. Green histogram bars on the short-term trend also indicate the trend is up. We get a velocity cross and an arrow, and this is a good entry. A good place to get out would be when we start seeing this leading line come back into the histogram and the red price bar come in, meaning that selling pressure is dominant there. This marks a period of consolidation that we'd just as well be out of. Then at 11:05 a.m., this is Eastern time, we see the next signal given. This is going to meet all of our criteria again. This looks like this was a big bar, but by the close of the bar, it's red, meaning selling pressure is dominant. We've closed below the pivot line. We have red histogram for a while now, so this has been priming us to watch for a downside entry. And we get the red arrow, meaning the force is down, is to the downside. Good place to get out. Green price bars, we're coming back into the histogram. The fourth trade is the most consolidated, and this is one that there could be another learning point for. This is a good entry and it meets all of our criteria. If you were to get out when you see this not really develop and kind of consolidate for a while, if you were to get out here at this red price bar, we don't have any short entry signals, but if you were to get out to protect your risk there, a good re-entry point is when you see these three lines, the light blue trend line, the gray dotted pivot line, and the red stop line converge again. We see the leading algorithm line, this blue line in the short-term trend indicator, push up above 0, meaning that the force is even that much more positive and we're going in the positive direction force. This is going to be a good re-entry. So if you were able to either hold, this is going to be the point where you're seeing a re-entry and a confirmation of your signal. The short-term trend indicator histograms also told you that throughout. If you did get out, you can make some of your profit back up, or find some more opportunity here when this convergence takes place. You'd be looking to get out again when the red price bar came in, so that would end up being a little bit of a profit for you. The last signal of the day is another short at 14:05, 2:05 p.m. This is meeting all of our criteria and shows another good move. So this is crude oil futures 5-minute chart, divergence analysis on NinjaTrader. If you have any questions or would like to get in touch with us, you can reach us at divergenceanalysis.com or email us at info@divergenceanalysis.com. Thank you.